So this goes against conventional investment wisdom, which teaches that you should diversify and not put your eggs in one basket. This is a sure way to get below average results that I can guarantee you. Hi, my name is Zola and thank you for watching my channel. In this video, I'm going to share with you 5 investing mistakes to avoid, especially if you are a beginner. Now, if you are new to this channel, please consider subscribing to receive the latest videos that are published every week on Sunday around finance, investing, business, entrepreneurship, and so forth. If that's the kind of content that tickles your fancy, please subscribe and let's walk this journey together. You are watching the Financial Metaverse. When investing, it's important to know what the common pitfalls are so that you can understand, prepare for them, and avoid them so that you can have the best possible chance of being successful as an investor. Investing mistake number 1. Not investing at all. I know that the investing climate can be very complex and often filled with scammers and misinformation, which can make one to lose confidence in taking any action to start the process of investing. But if you don't take any action, as the old English saying says, you miss 100% of the shots that you do not take. So by starting the journey of investing, even if you do make mistakes, at least you will learn what doesn't work and what is likely to work for you personally. You begin to develop experience and confidence when you start the journey and the process of investing. So if you are reluctant to invest because you feel you do not know enough about investing, you will never know enough. You just need to begin by taking a little bit of action, which will give you the confidence to take more action over time as your knowledge and confidence grows through experience. Investing mistake number 2. Investing in assets that you do not understand. This is a common pitfall for most investors, especially beginner investors, because you get confused by the complex terminology and phrases and jargon that is prevalent within the investment world. And you think this is too complex for me to understand, so rather let me just take a chance or listen to someone whom you may think knows more than what you do. But as with any discipline in life, if you want to be good at it, you need to invest the time, effort, and energy to learn at least the basics and fundamentals of how it works. If you want to invest in shares, for instance, you need to learn the basics of how to assess the health of a company. This means understanding the basics of a balance sheet, otherwise known as the statement of financial position, understanding the income statement, understanding a statement of cash flows, and so on. This will allow you to be able to invest your hard-earned money with some level of confidence. And of course, as you begin to grow in your knowledge and experience, and so will the probability of you achieving better and better investment returns. Same with cryptocurrency. If you have an interest in investing in cryptocurrency, you need to know the basic fundamentals of what cryptocurrency actually is and where it derives its value. Because once you have that knowledge and information, you can invest with confidence in these industries and not be swayed by popular opinion or the latest craze. Investing mistake number 3, putting your eggs in many baskets. Yes, you've heard this correctly. Putting your eggs in many baskets is an investing mistake, especially for beginners. Think about this. Who do you know that is successful in any discipline in life that started off by having a focus in many different things? It simply does not work. You will not be able to master anything if your focus is divided among many different things. You need to be able to narrow your focus into one particular industry, and if needs be, even one particular company. Start with that. Develop mastery and competence in understanding how that particular industry or that share or that instrument works so that you can invest with confidence. Otherwise, you will never get above average results. Your average will always be average or below average, which will not be able to get you the type of returns that will allow you to live the life that you so desire. So this goes against conventional investment wisdom, which teaches that you should diversify and not put your eggs in one basket. This is a sure way to get below average results that I can guarantee you. Investing mistake number 4, using money that you can't afford to lose. Money that you can't afford to lose is money that you need to sustain the basic necessities of life, such as your housing, your food, your utilities like electricity, water, your traveling costs, healthcare insurance, and so on. When you use money that you can't afford to lose, you are literally gambling, because investing is a long-term game, at least 10 years or longer. So when you understand that about investing, you will not have the expectation to be able to get returns within a month or two, or even a year, and not place yourself in a position where you will struggle to meet the basic necessities of life, which will put financial strain on you and even start affecting your psychological health, straining relationships with people that you care about, and so on. To be able to invest successfully, you need to have a surplus in your budget. A surplus is the money that is left over after you have paid all of your expenses. If that does not exist in your budget at the moment, then that should be your primary focus, to create that surplus. So how do you create a surplus if you don't have one at the moment? One is by lowering your expenses, two, increasing your income, or three, doing both of those at the same time. Now, once you've created the surplus, you are in a position to invest that portion without worrying about short-term volatility, because you appreciate that investing is a long-term game. I would compare investing to planting a seed, the seed being the capital or the hard-earned money or this surplus that I've just referred to now. The seed is planted in fertile ground. The fertile ground is created by doing your research, understanding the asset or the instrument that you are investing in, and then you have the confidence to be able to plug in your capital or the seed into the fertile soil and just leave it and allow the processes of nature to take its course, to allow the seed to grow over time and produce the kind of fruit that will allow you to live the life that you so desire. Investing mistake number 5, listening to the wrong people. With so many people giving advice about investing out there, it can become almost impossible to know, understand who you should listen to. Now, let me give you a tip that was taught to me by a very successful investor and business person. It is this, and this applies not just to only investing, but in any discipline in life that you are trying to master. You should be listening to people who have what you want and ideally have been where you are. So the people you should listen to should be people who've achieved the results that you want to achieve, and ideally people that you can relate to their journey, because that will allow you to have the belief, develop the belief that this is not only possible but probable for you to achieve as well. Very, very key concept if you want to be successful in life generally and in investing specifically. I really hope you found value in what I've shared with you today. If so, please consider liking this video, share it with those whom you think may benefit, and importantly, please consider subscribing and hit that notification bell, and make sure you watch these videos.
I can feel the pain on my back, yeah. Keep on taking pills every day, yeah. Trying to numb pain on my back, yeah. Still trying to change on my face, yeah. I can feel the pain.